Hi everyone, I'm Justin from Sterling Homes Edmonton, and today I'll be walking you through how to buy a house. This webinar is meant to be a step-by-step tutorial for anyone looking to buy, and the hope is that the video be as comprehensive as possible while also being concise to really get down to the nuts and bolts of home buying. And so we'll be walking you through 9 steps total, including down payment, building credit, getting pre-qualified, working with a lender, when is the right time to buy, finding the right home that's for you, using a real estate agent, how long does the process take, and all things deposits. So let's get started. The first step when buying a home is to discover how much money you need as a down payment on a primary residence. Now this largely depends on the type of mortgage you get, and the type of mortgage you get will affect how much you need as a down payment. And so when it comes to getting a loan in real estate, most people have 2 options. Number 1, the most common type of mortgage we cover is a high ratio mortgage. This is a loan that is backed by default mortgage insurance, such as CMHC. This means that you can put down as little as 5%, which is very common for first-time home buyers. It also means that on a $400,000 home, you would put down a $20,000 down payment. However, because this type of loan only has 5%, you need to buy what is mortgage loan insurance. This is an extra charge on top of your mortgage because you are statistically more likely to default on your loan. So most lenders will add this to your mortgage repayment schedule. The amounts for your premiums depend on the percentage of your down payment. And so premiums can range anywhere from 2.8% to 4%. There are also some limits as to how high of a loan that you can get with a high ratio mortgage. This is just to prevent people from going out to buy a $5 million property just because they have the down payment to do so. And so for CMHC insured mortgage loans, the maximum purchase price is $1 million. Long story short, the majority of our buyers do opt to purchase their home with only 5% down as they start to build equity in their property. Alternatively, the second type of mortgage is what's called a conventional mortgage. Mortgage lenders in Canada cover up to 80%, which means that the buyer must have the money available to pay the remaining 20% in down payment. This type of mortgage is not backed by any mortgage default insurance providers, meaning there's no additional premiums on top of your mortgage payments. So now that you've figured out how much money you need to put down, it's also really important to figure out how to build credit. Now this is absolutely essential when it comes to getting a loan. Just like you need to know how much money you need for down payment, you'll also need to present your credit score to the lender. Now, your credit score is essentially able to show banks how likely you are to repay any money that was lent to you. And this is typically done through credit card history, student loan history, auto loan history, etc. This is essentially, or you can think of it as a credit score or loan repayment report card. Now, ideally, you're going to want to have a credit score of above 680, and the higher that you go, the better, as banks will typically offer you their lowest interest rates possible, the ones that you typically see advertised and marketed. Now, in terms of what if I need to increase my credit score, what should I do? A couple of quick tips might include, number 1, increasing your credit limit. If you're using, for example, if you have a limit of $1,000 and you're consistently using $500 of your $1,000 limit, it's making it so that your credit limit ratio is too high. You're actually better off, alternatively, having a limit of $5,000, for example, and still using that $500. That will considerably lower your credit limit ratio. Other tips might include, of course, keeping your balance low on your credit cards, paying your bills on time, as well as paying down debt, especially the high interest rate debt. Get those ones off your books first. So the next step is now to go and get pre-qualified. This means going to talk to a lender before doing anything else. And so by speaking to the lender, you'll know exactly what you can go out and purchase. The last thing you want to happen is to go out and start looking for a property, and you find the perfect place. It's absolutely amazing. You see yourself growing old or raising your family in that place, and then you go and talk to the lender only to find out that you can't afford the place. This does happen. It can be quite heartbreaking. And so we recommend talking to a lender at least to figure out roughly what it is that you're able to afford before seriously looking at properties. So So there are a few things to keep in mind and to prepare for in advance of speaking to a lender. A lender is going to want to see the following. Number one, 2 years of previous tax returns so that you can prove income. Number two, your full credit report and credit score. Number three, they're going to want to see at least 2 to 6 months of bank statements to again prove income, prove that you have the down payment and display any expenses. Number four, if you work for any sort of employer, they'll want to see your pay stubs. And finally, number five, they're going to want to see proof and documentation of anything else that might be included in your financial portfolio. And this would include any liabilities or assets that you might have. One question that I receive probably the most is, when is a good time to buy? The first thing that we should cover in this question is seasonality. And that many buyers believe that the best times to buy are the spring and the summer, and the worst times would be the winter. Now, this is partially true in that if you're looking to buy a home in the spring and the summer, typically you'll find a little bit more inventory on the market during those months, as most sellers will wait for those months to put their homes for sale. So this means if you're a really picky buyer and you have really specific tastes, spring and the summer is when you'll have the most inventory on the market. However, the thing is that most other people have that same mentality. And so that would also mean that you're competing against more people during those months. And as you know, from a buyer's perspective, the more competition typically would represent that you might be paying a little bit more money as well. Now, on the flip side, winter can actually be a better time to go and buy a property, contrary to the most popular beliefs. Because in the winter, we found that there are fewer people looking for homes, which means that as a buyer, you can typically find some good opportunities. So really, I guess what I'm trying to say is that there's no best or worst time. It really does come down to when you find the right place for you as a buyer. As an industry professional, I'm often asked, Justin, will Edmonton real estate prices continue to rise? Are they going to go down? Are we in a housing bubble? So of course, I don't have a crystal ball, but by understanding previous market patterns, this gives us an insightful view into what might happen going forward. Again, based on historical trends and relevant data. So most markets are driven by the basics of supply and demand, and the housing market is no exception. Low supply coupled with high demand equals housing pricing going up or housing appreciation. So decades and decades of pricing gains and appreciation in Canadian housing have been due to supply not growing as fast as demand. So if we look at the supply side to start, housing supply is actually quite easy to calculate, as we can quickly identify how many new homes are being started each year. So since 2016, Edmonton housing starts have averaged out to about 11,000 starts per year. So as we look on the demand side, population is by far the strongest indicator of demand. The need for housing increases proportionately to the net population gains. Why? Well, everyone needs a place to live. So Edmonton sees population growth every year. And the influx of residents comes from international sources, as well as interprovincially, people coming in from Ontario and BC into Alberta, as well as intra-provincially, people coming in from rural Alberta into Edmonton. And so since 2018, the metro area population of Edmonton has seen an average population growth of roughly 30,000 people per year. So quick summary, what does this mean? Edmonton adds approximately 11,000 new housing units per year and gains 30,000 people per year. So with an average Canadian household of 2.5 people, this leaves Edmonton in a growing deficit of approximately 1,000 housing units per year. What's worse is that this deficit can worsen if builders reduce housing starts, such as we saw in 2008 and 2009. Alberta's population growth also gathered high levels of momentum recently, with increased interprovincial migration and a federal government that's recently announced intentions of significantly expanding the amount of immigrants entering the nation, with aims of seeing upwards to 500,000 people coming into the country every year up until 2025. And a recent study from Ryerson University compared Edmonton to the fastest growing metropolitans in all of North America. And Edmonton actually sits in the top 10 in all of North America for population growth. So So the question still stands, is now the right time to buy? Well, if you look at the laws of supply and demand, both supply deficit and strong demand support that this may be a good time to buy. Edmonton ranks in the top 10 fastest growing metropolitans across North America. Population is projected to grow at record levels for several years to come. And Alberta is expected to add 2 million people by 2046. And regions like Edmonton will see higher growth due to a strong trend towards urbanization. Now, if you look at the supply side, housing supply will continue to struggle to keep pace as we struggle to fill labor shortages across the country. Now, regardless of all of this data, general rule of thumb is that real estate continues to be a very strong investment. So if you're planning on living in the house for years to come, we have a 120-year history of price growth in this country, and I don't suspect that to change. Now it's time to write a list of exactly what you want in a house and really put some serious thought into what is going to be a deal breaker for you. I describe these as non-negotiables. What can't you live with and what can't you live without? So for instance, this might include like what location do you need to be in? How many bedrooms do you need? Do you need a yard? Now, if you're wondering where to start, walking a few show homes will be a great place for you. From there, it's really important to start thinking about what you would like to see in your house. Do you want to have a view? Would you like an open floor plan? Doing all of this is really going to help narrow your list of properties to visit. And having a list is like having a map or a compass, allowing you to find a place that is the best fit for you. So how long does this process usually take? We've shown buyers around where they've literally chosen the first property they viewed. They view the property and 21 days later, they close on it. Now on the flip side, we've also shown buyers for years where they haven't purchased anything yet. And so realistically, for most buyers, we would expect this process to take anywhere between 45 days to 120 days. We found this to be typical for most people. That translates into, a house hunt of anywhere between 30 to 90 days and an additional, 30 to 45 days to close on that property. Get the loan, confirm financing, and then close. So by now, you have your list of homes and your list of wants and needs, and you're ready to start viewing some properties. And so for this, when it comes to viewing some properties, I really recommend taking the time to take in the property. Take a Saturday, take a Sunday. At Sterling Homes, for example, we have these self-showing options where it allows you to open up the home yourself and really take a test drive of that home. Take a nap in the master bedroom if you'd like. Really allows you to, in a non-pressure environment, just get a sense and get a feel for the different homes that are on your list. The more properties you see, the more you're going to recognize good properties when they show up on market and help you identify the best property that's going to be the right fit for you. It tends to be hard to commit to something when you don't know what else is on the market. We've shown buyers the perfect home, but it also happens to be the first home that they viewed. And they don't want to make an offer because they have no idea what else is on the market, despite that being that perfect home at that best price. So see as many homes as you can. This might also help change your criteria of what you think you need. Maybe go and see a home and realize you're open to another location, or maybe you find something else that you need and now you want to add it to your list. So the more you see, the clearer the decision gets. Now from here, you've found that right house, and it is now time to make an offer and put down a deposit. And so we often get asked, how do deposits work exactly? So if you're purchasing a home at Sterling, you will need to put down a deposit of $1,000 with the initial contract. This deposit pretty much gives us a reason to take the home off of the market while the transaction finalizes. Really, the purpose is to show the seller or the builder that you're a serious buyer and that there is no reason to receive any other offers. Now, upon condition removal, which typically happens in the week or two following the offer acceptance, the builder will require that 5% down payment. So to conclude, that does wrap things up for our video. I just want to say thank you for watching. We hope it was helpful. If you have any questions whatsoever, please feel free to reach out. You can visit us at any of our show homes across the city. You can call us at 780-800-7594. You can shoot us an email at ask@sterlingedmonton.com. Or if you just like to peruse or browse some available homes, you can do so at sterlingedmonton.com. Thank you so much again. Bye-bye.